See, okay, sure. There's talk of widespread recovery in equities, but solar stocks, they're down significantly over the last 12 months. Suntech Power, LDK, First Solar, Evergreen, also JA Solar, still with big red arrows over the past 12 months, well off their highs. My first guest is a portfolio manager at Harvest Capital Strategies. He's also an expert in the world of solar power. He says there are solar companies out there that you might want to think about buying. Welcome to the program, Andrew Kaplan. Good to have you with us.
Nice to see you again.
So tell me, just start off by giving us a little bit of the lay of the land, right? Because we know that in the world of solar power, you need government subsidies in order to survive, right?
Sure.
You need to create this business.
Yep.
What's the outlook here in the United States? Is the Congress subsidizing solar power?
Yeah, although it has been one of those, it's the night before Christmas and time, an hour takes a year. We've been waiting for rules all year long since the stimulus was first announced. Was it now 6 months ago, 5 months ago? Since the stimulus rules were announced, people knew billions of dollars are coming. It's going to be really helpful. We just don't know when and how much. And unfortunately, 2009 is almost over. They just this past week, the Department of Energy posted on their website, what are the rules if you want to get one of those cash grants in lieu of applying for a tax rebate? People thought tax rebates would be really tough this year because not many of us actually have any taxable gain to report. But now you can get a cash grant instead of 30% of the project cost. They're not accepting applications yet. It's going to be next month, the month after. Most guys are saying 2010, it'll be helpful. 2009's done, though.
It's over. Okay, 2009 is over as far as the subsidies from the U.S. government are concerned. So let's go overseas then. Let's take a look at what's going on, for example, in China. We've spoken in the past. You've detailed what the Chinese government is doing, trying to stimulate domestic demand for solar power. Are they doing a better job than the United States?
Yeah, I mean, it's one of the contrasts between a capitalist and a command economy, right? When China wants stimulus, they get stimulus. And they actually produce rules also this past week. It's a busy week for solar, saying that every province in China, 23 different provinces, each can produce 20 megawatts of power next year. So that's 500 megawatts. It's about 10% of worldwide demand for solar. The government will pay half the cost in an urban area, 70% of the cost in a rural area. Now, that's real. Unlike in the United States, where they're going to be arguing about it for a year, it's actually going to happen.
All right, but when does it really happen? I mean, does it start to affect the companies right now, or do we still wait until 2010?
Well, I think you'll probably see it late Q4 this year. Though I think the Chinese solar companies, who this is really designed to help, China's very thoughtful about making sure that when they give stimulus, it doesn't leak and it really goes to the domestic companies they're trying to. They're so concerned about employment.
The checks go directly to their own manufacturers.
Exactly. Maybe college unemployment, all those things they're worried about. So it's going to go to all the local guys. The local guys are as full as they can be right now. Germany is having seasonal strength because the subsidies there are winding down at the end of the year. The Chinese guys are as full as they can be for another 8 weeks, filling all that German demand. When Germany rolls off kind of in Q4, my guess is that the Chinese government is going to be there to say, okay, here's some new projects, get to work.
All right. What about Germany right now? Because that was one of the hottest markets because it was one of the biggest subsidies available for solar projects. What's the status?
It's been overly successful. It's been a victim of its own success. So the German feed-in tariff, which is 31 euro cents, or about 43 U.S. cents per kilowatt hour, to give a sense, well, most of us pay about, 12 or 15 cents a kilowatt hour. They're paying you triple the cost of electricity to sell it into the grid on a cash payment. Everyone thinks and everyone knows that that subsidy will come down next year, might come down 10%. Some guys are saying it'll come down 30%. A few people are saying it'll go away entirely. In any case, you don't want to take your chances and wait. It's so attractive right now, especially given that the cost of building a solar plant has come down by half or more this year, as we've talked about already. So the economics are great for doing it now. They might be great next year. They might not be. So everyone is doing a land rush right now. But remember, you can't get them in the ground in a day. It takes about 2 to 3 months. It takes another month or so to get them over from China on a boat. So the real bulk of demand is July, August. By the end of September, it's done.
It's done, and then maybe it goes over into that Chinese domestic demand scenario. Just to outline, though, quickly, because I know that there are two major technologies when you talk about solar, right? There's thin film technology, and then there's the polysilicon, the photovoltaic strategy. What are the two? What are the differences?
Well, the differences as far as the end user of electricity, plugging your hairdryer in the wall, are zero.
Still works.
Right. It's power, which is part of one of my arguments all along. This is not a high-quality, high-brand thing. This is, do you get power and does it work? There's a difference in how you make them and how much it costs. For the last 3 years, the thin film technology used by First Solar on glass, a thin film of cadmium telluride, much cheaper.
All right, we're gonna continue the conversation more with Andrew Kaplan. We're gonna actually talk about First Solar and some of those solar stocks. This is Taking Stock on Bloomberg. I'm Pim Fox. We're talking about solar and solar stocks. My guest is Andrew Kaplan, portfolio manager at Harvest Capital Strategies. Andrew, I beg your pardon interrupting you about the difference between the two different major technologies. You've got the thin film technology characterized by the company, let's say First Solar, and then you've got the photovoltaic, which is really the polysilicon feedstock for solar. What is the technical difference, for example? I mean, is it the way it looks, the way the thing gets put together?
Technical difference is, light hits both of them and it makes electricity. Technical difference is the First Solar panels have to be bigger for a given amount of electricity, lower efficiency, but cheaper to make, or historically cheaper to make because you're using glass and a thin coat, and you didn't need that one material that was in shortage for 3 years, this polysilicon that was used for semiconductors now. But other than that, the similarities are greater than the differences. You both need to wire them up, and the module installation is pretty similar. The First Solar ones cost a little more to put on the roof, but they have been much cheaper to make. And First Solar is the only company in this industry that's put real R&D into figure out how to make that cadmium telluride work. Everyone else is, you could call them commodity suppliers, lowest cost, low labor cost. Let's drive it down by a nickel. First Solar's been trying to build a premium product using a technology nobody else knows how to use.
And that's that thin film technology.
Thin film on glass. Yep.
And they're actually reporting their earnings tomorrow. When after the market closes tomorrow night.
Yep.
What is the market expecting? I know that, boy, when you take a look at the market action, and I mean, this is a stock that goes up $7, $8 a day, goes down $7, $8 a day. What's going on?
I think until a week ago, the market expected a disaster for some of the reasons you and I talked about a week or two ago. The price of polysilicon has come down from $400 to $50. So the competing technologies to First Solar, where they were pricing at $4 last year, where First Solar was pricing at $2, then they were pricing at $3. Now they're pricing at $2, and I think people think they're going to get down to $1. So people think, holy cow, how's First Solar going to sell in that market where the end user doesn't care where the power comes from? They just care how much it costs. So I think until a week ago, the market was pretty confident that they'd miss, but something happened. What happened was that SunPower, another high-cost U.S. producer, surprised the market by saying, you know what, demand was lousy all year, I'll grant you that, but in the last month or so, things have gotten much better. The German subsidies, the gold rush to get into the market before it ends, stock was up 35% on earnings. Now, a lot of the perma bears on First Solar are saying, I may hate the thing, I may think it's going to zero next year or the year after, but right now, get me out of the way. This is a volatile stock that last quarter on earnings moved up $45 in the day after earnings.
$45 in just the one day after the earnings came out.
Yeah, it was a tough day in the world of hedge fund shorts.
All right, so we're going to have to obviously pay attention to what the report is for First Solar. Yeah. What about well, let me ask you, would you be buying the shares of First Solar? Do you just want to wait and see what happens after the call?
So I have a view, and I think you and I have talked about it before. I think their economics are going to be really, really challenged over the next 6-9 months. To predict what they're going to say tomorrow and how, I think it's a little bit early to be short the stock. If you ask me, how was I going to trade it between now and tomorrow night? So, find a smarter guy than me that understands trading desks. I would say what you can tell in the pattern, though, of how it's acted day by day is that a lot of the fast money shorts, a lot of the guys who say, I hate this thing, I think it's going to zero, you can see the pattern covering day by day. The stock gaps up, and then it drops off. It gaps up, it drops off. It acts like a stock where a lot of guys are short it but are afraid to be short into the print.
All right, so we've got to see what happens tomorrow. First Solar coming out after the close. Now, there are some stocks, though, using this photovoltaic technology, the polysilicon. You say that's the price that's going down very rapidly. Chinese producers predominantly, right? So Yingli would be an example.
Exactly right.
So you like that company?
Yeah, I do, actually. Yingli and a competitor, Trina, and another competitor, Suntech, all realized early on that, you know what, we have a labor cost advantage, we have an electricity cost advantage, we have a government financing advantage. I know this stuff is hard to make, and in China we're not quite as high tech as they are in Germany, so it's going to take a while to learn how to make a cell that's just as good. They're just about there now, and the consumers are starting to notice very little difference between the Chinese cells and the European cells. They had to sell at a big discount, but now they're coming up where they can sell almost at the same price. Their costs are going to be much, much lower. So those are great companies where they're trading at 10, 12, 15 times this year's earnings. If you really believe in solar technology getting cheaper over time, those are probably the best ways to play it.
Now, when we were just talking during the break about, almost a kind of a secular shift in the way the industry is put together, and you used the example of the semiconductor industry. Just to explain that a little bit more.
So I've been a memory analyst for longer than I probably want to admit to you, but in the late 80s, I was covering the DRAM industry in the United States, and DRAM, the dominant companies, hard to believe it, Intel was a major player in DRAM in the 80s. Texas Instruments was a major player in DRAM. Then there was that pesky little company in Idaho, Micron, that somehow managed to survive. And when the Japanese and then the Koreans started to enter the DRAM industry in the 80s, people said, no way, this is a high-tech business. Only American know-how can do this. Yeah, they can produce good, cheap cars, but something like DRAM, where you need high technology to get the things to work every quarter is a new line width shift. No way the Japanese will do it. And what happened was so much cheap capital got poured in because the government saw it as strategic, as a way to advance their economy, that ultimately they overwhelmed whatever technological advantage the U.S. had, got offset by cheaper capital. China, there's a pretty good analogy. Chinese might not be as technically adept as producing a cell that gets the maximum efficiency, but they believe this industry is big and they have more than enough capital they can invest in it to dominate this industry for a generation to come. And
you've described how, for example, once you start the production line, it's basically a switch. You just let this thing run and it produces these chips.
Yeah, it's a sorcerer's apprentice. Yeah, you get unbelievable economies of scale. The cost of producing power with solar 2 years from now is going to rival,
So solar's going to be big. It's just a question of really which technology is going to dominate and whether this cheap source of capital that you're describing, coming from, let's say, from the Chinese government, whether that's going to tip the scales.
Absolutely. Once there's demand for electricity. Of course, the irony of all this, we're talking about it as if there's huge worldwide demand for electricity while we're in a multi-year decline of GDP growth. No one needs electricity anywhere. But to the extent we think we're going to grow and we're going to need electricity, PV solar is going to be a place you're going to get it, and China's where it's going to come from.
All right. I want to thank you very much for coming in. Andrew Kaplan is sharing your thoughts on us from Harvest Capital.